Good day, all. Ira Epstein of Linn Associates with your financial market wrap-up, and this is for Thursday, the 13th of June, 2019, and we're just after 3:25 p.m. Central Daylight Time, which means we're in the pause in the stock markets. Between 3:15 p.m., 3:30, the stock indices stop trading. You determine the settlement price. Then they reopen for another 30 minutes of trading from 3:30 p.m. to 4. So you had a late day rally. This thing came out of nowhere. You were only up about 30 points or so, 25 points in the Dow, and then the market got into one of these streaks, which often happens in the summertime. It could be up to the or downside, but you got a nice bid in the market. The gold market came back, as you can see, near the highs. The bonds and notes sold off a fraction from their highs, not very material. You know about already the tanker situation, I'm assuming, where two tankers got hit in the Gulf of Oman, and the U.S. is pointing fingers at be it Iran or an Iranian-backed faction that they think Secretary Pompeo said that's the finger. He believes it has to do with that. And in the weather markets, we're still cool, and you can see natural gas still under some pressure. All right, so when we look at a weekly chart of the closes here, the thrust of the market was down. Now the bias of the market is up because the market has gotten almost on a straight line, as you can see, back over the 18-day average of closes. I was looking at this today trying to say, should I just not talk about it or not? But no, you've had a down thrust and a correction in the market. So I decided that yesterday, if you'll recall, I said, where are we in Fibonacci numbers? So what I did is took the high that we made recently. That was that, if you will, May 1st high. Then, as you know, we crashed for all purposes, a mini form of a break, a crash, whatever you want to call it, down to these lows. And we've had a bounce, and the market seems to be somewhat paused at the top number, the 62 percentile retracement range, and it's over that. I would say if the market gets over the highs that you made right here, that you can throw out this Fibonacci count. It's just no good. It doesn't mean that it's working on this case. You're in something else in the market. If this holds and the market starts down again, then you just got to pay a little more attention to where you're at in terms of that. In terms of a correction, we finally are getting one. I want to take the past 2 days off because this was where the market was on Tuesday. And if you'll recall, I said, look for a Tuesday possible break. Do I know it? I don't know it, but after this size of a rally, I was looking for that. And that has set up this break that we just had, and we're getting a reversal off of this today. Now it gets real exciting. Do we go for those highs, or does the market fail to make those highs and go into a further correction? That, I think, is the open question for us. In terms of moving averages, if the market were to break under today's lows and just drop down, these come into play. Now, you're having what's called an outside day up. You should not take out today's low, the way that I teach charting, on Friday or Monday. If you do, I think you're setting up what's called a bull trap. And in that trap, then I look for the closest of the key moving averages, and I've got three of them here. I've got the 18, the 100, and the 200. This would be the one that possibly, and that's all I could use the word, is possibly, comes into play if the market were to break down now through today's low. In terms of resistance, it's the upper Bollinger Band. And that comes into play nicely because to get out and through this high right there, which was 29.1150, that gives you, taking that out, remember what I said, then I throw out the Fibonacci counts and everything, and that becomes the resistance in the market, setting up the potential to go to the all-time high in the futures contracts again. Not saying it's doing that, I'm saying that's the potential. You're overbought. The pattern is still one of a straight up move that's finally getting the beginning of a correction. And the question is, do today's lows hold? That's the only way that I know how to describe what's going on. If we take a look at the NASDAQ, let's look at yesterday's high. It was 75.31. We know the low took out yesterday's low, so did the high, and you closed higher. I have a very similar scenario. I've got the lower low, the higher high. I've got an outside day up. What I don't have is the bullish crossover. In fact, I got a strange crossover that happened today. I have the 100-day getting over the 200-day moving average. See this right here? So you had an opposite crossover that's not valid. Why is it not valid? Whenever the 18-day average crosses the 100, you're looking for price, if it's a downside cross, to be under it. If it's a bullish cross, to be over it. You just had a bearish crossover, that's what I'm going to define it as, that is negated because prices are over that number. It would have to catch up to it, and then we'd look back and say maybe that was a warning signal. In the Dow, this is what you call a vertical move. I mean, just straight up to the Bollinger Band, ran out of momentum, haven't even gotten weak enough to get back to key moving averages, in overbought territory. Like the other two indices, I don't want to see today's low taken out Friday or Monday. So if people were to ask me what shouldn't happen if this market's going to stay bullish, in my opinion, that's what should not happen. If it does, you could be setting up now for charts to get back to these numbers. Doesn't mean you can't still be bullish longer term, but it sets up more of a correction. In the Russell, this market's still very much in the bull camp. Higher lows, higher high. We don't know where this high is yet going to end. Different chart action, not a reversal day, an outside day like you had in the other markets. But we have three very serious layers of resistance. We have the 100-day average, the 200-day average, and the Bollinger Band. Remember what Bollinger Bands are. The first time you hit a Bollinger Band, be it an upside one or a downside, I believe that's where pros take some money off the table. Now, whether they get out of all their positions, what do? I don't know. I'm also assuming when I say that the pro is following the bias of the market. I don't care how he did it, but if you're under that 18-day average, the bias is down, and I'm looking for them in that zone to be coming out there or up here, and so on. Yes, it's a lot of assumptions, but you have to do that when you're trading or as a chartist, one of the two. You have to assume certain things if you're going to make or want the indicators to make sense to you. How's that? In the VIX, I just see this sideways action. You're caught right through here. If the market breaks through this low, terrific. Then you're under the 18-day average and a downtrend right into the 100-day average. I don't know what to do with that. You're oversold in addition. I will stick my neck out again and say, if you get down to the lower Bollinger Band, I would expect the pros to do what? Write puts. If they get to the upper one, I expect them to write calls. Right now, they're not doing anything that I can see. In the bond market, you still haven't regained trying to get the embedded reading. Yeah, both numbers are over 80 today, but it's the first time they are. If the market's going to correct, I'm still looking for the 18-day average in play. And the reason I say that is you had lost the embedded reading. Now, today's the first day that both numbers that make up the slow stochastics are back over 80 since they were lost. That was when this was the day they were there. Then 2 days in a row you lost it. Now you're back to it. You'd have to prove that I'm wrong, and that's what I'd want to be if if this thing's going to go against me. You got to take out this 154.30. But I'll give you the other part of the market that's bothersome. Often when you lose an embedded reading, you don't wait as long as you are right now for that thrust action down to the 18-day average to happen. It's a sign that this market wants to stay in this friendly term. But when I think about it, next week we have the FOMC meeting, so maybe that's what the market's doing. It's just sort of playing with itself. In the 10-year bonds, it's the same thing. You had lost the embedded reading. I was of the opinion the market would try to get price in the 18-day average coming together. Even if they do, look at each day, that average is climbing several points a day minimum, and so even if the market falls to it, there's not a lot to be gained is the point now. TLT, the market's lost the embedded reading. I was looking for the 18-day average. I've got a pattern of a lower low, higher high. It seems to be the market just spinning its wheel, if you will. In the dollar index, we're in something of a bit of a correction. This thrust from all the way up here, this 98, let's call it the 98.20s, 98.30 level, all the way back down into the 96.50 zone, found its traction right against that 100-day average, and we're getting a bounce. It is not an uptrend. The swing line is up, but the bias is down since you're under the 18-day average, and momentum, which was oversold, is in a corrective mode pointing higher, so it's giving the dollar a little bit of a bump there. In the euro, it's the flip-flop. You've got the lower highs, lower lows. Now, one of the things in the euro that people are looking at is, will the European Central Bank have to go back to a quantitative easing program? And if you're looking at manufacturing, and there were numbers out on that today, not very good. Their big engine, Germany, has slowed down. The best performers were, I believe, Spain and I'm trying to think of the other country, France. Spain and France were the two strongest, and those aren't generally the powerhouses that you look for. But lower highs, lower lows, again, over the 18-day average, so you don't have what I'll call a trend that's locked in, and you're correcting an overbought condition. The British pound, Boris Johnson won the first round of voting. Now, I think it's on the 18th that there's another round that comes up in the Tories, and they're going to figure out who's going to get what. We keep going until July, until there's going to be the election for the new PM. But you knock out candidates right now. It's very different than it is in the U.S., so you might want to go to Bloomberg, Reuters, one of these, and read about it. But lower highs, lower low, the trend is down. You finished today at 126.76, or going to be in that range because you're still not closed yet. And 126.90 is the 18-day average. I'm going to give the bears the control of that one. In the Japanese yen, you still have this pattern of higher lows but lower highs. Don't know what to do there. Now, today the market reached up. If you look at today's high, it was 92.46.5. Yesterday's high, that's yesterday's high, was 92.44, and the low was 92.15. So we have an outside day to the upside. You know what I'm going to tell you with that? If that's going to hold up and keep this newer pattern of higher lows and now a higher high, the short term, you can't take out, in my opinion, today's low on Friday or Monday. Otherwise, you create what I'll call a bull trap, and you put into play the possibility, a strong one, that you can get back to neutral territory, which I'll call that line in the sand, the 18-day average. There's no magic about it, but that would be a failure, what I label a bull trap. In Bitcoin, the trend is back to the upside. We talked about that yesterday. Higher lows, higher highs. The market's holding now and fighting a battle at this 18-day average of closes. In the process, the Bollinger Bands, both the resistance point that develops from it and the support, very much sideways action, and momentum has flattened out in the market. But you give the nod to the bulls at this time, and they are defending that 18-day average as they've turned the trend as defined by higher lows, higher highs up. In the Brent versus WTI crude, the market made its run back towards this line in the sand, that 18-day moving average of closes, and held it again. Now, you did slip through it back here, and you slid more than one day. Now it seems to be holding it, which is more bullish for the Brent. And gee, if we think about it, the tankers in the Gulf of Oman shouldn't have anything to do with U.S. WTI crude. When you look at the Brent, you can see the lower high pattern, the lower and low pattern, oversold, and in the marketplace, it's interesting. If we look at the slow stochastic reading, both numbers under 20, both were under 20 yesterday, not the day before, not the day before. You're just in an oversold condition right here in the market. To negate the downtrend, you've got to take out this number right here at 64.13, and resistance is going to be the 18-day average, and while it's 64.72 today, it's falling at the rate of almost 35, 40 points a day, so that number is going to get down and maybe close to the 64.80, something like that, zone tomorrow. In the WTI crude, the pattern's different. We have higher lows, higher highs. But we have, if you look at the slow stochastic reading, both numbers under 20, both under 20 the day before, not the day before. The day before it was, the day before it was, and the day before. You still have an embedded reading, is my point. So until the red line closes back over 20, the bears still control the market. Admittedly, you can lose that tonight on the open because the market's going to close strong in the day's range, so you'd want to see how that's going to look. In gasoline, the market is flirting with trying to lose that embedded reading. It hasn't. The bears still control the market, but the pattern's changed now. The pattern, while it had lower highs and lower lows, now you have a higher low and lower highs. We're in a pause. I still believe that the slow stochastic rules the day, and I think today was one of those days where traders just looked and those tankers scared a lot of people when they got hit. Now the question is, was it just a reaction, and does this market resume its downtrend? If it's going to do that, the key to the market is taking out yesterday's low. In the nat gas, you still have the pattern of lower highs, lower lows. The market still has the embedded reading. You know what's going to happen. One of these days we'll get the warmth in the forecast and the market will reverse itself. But until that occurs, the bears still control it. Will we get down to the lower Bollinger Band? That's going to be the hard thing that the market looks for. So you put it all together, you wonder where you're at, and that's what I'm here for. If you haven't seen my research, and I'm talking what I write in my morning videos or any of that, I'd like you to take a free trial to it. All you need to do is give us a call. You can also go to the website, www.iraepstein.com. If you click on and get to the website, you'll see our carousel of free offers. This is certainly there. And what you'll find is that I'm right to the point in what I write. I don't want to write volumes. I like my videos to do that for me, but I also give you the points for the next morning's trade and what happened today of interest. You don't need me for the breaking news. You need me to give you an idea. Ideally, if you're looking at my research, what are we seeing out of that for the next trading day? I'm Ira Epstein. You can always click up here. Remember that if you're watching me on YouTube, that'll take you to our page. Have a great day.